Alright, I'm going to shoot a quick video. That is a chart of internet. Let's see, that's called an Internet Initiative Japan. That's an ADR. Trades on the NASDAQ. I think it goes back to the 1992, and that's JOF, the Japanese Small Capitalization Fund. That was a stock that was introduced to me by John Bollinger when I used to read his newsletter, Bollinger Bands. And he would actually go how he picks stocks and what he does and how he trades them. Really sharp guy. Here's just this is a daily on it. That doesn't mean too much to me. I'm not interested in that day trading stuff. That's a different thing. This one got a low PE. Pays a dividend about 1%. I don't think that's anything to get excited about. Yeah. And it is a small, it's a closed-in fund. And you're going to get diversification. It's cheap, relatively speaking. The Internet Initiative, as we're going to see in a minute, looks a lot like a regular NASDAQ stock. It does have a dividend. It's got a small yield, a little lower than the other one. The PE is higher, and this is a very volatile stock, which we'll see. Let's take a look at the charts. Okay, here is the small cap fund. This is a 10-year chart. I have the S&P here. So the S&P, it is underperforming the S&P over a 10-year period 90%. So if you're one of these reversion of the mean type of guys, then you're also at the top of the Bollinger Band, the trading bands. You're at the top of that. In fact, you broke through the trading band here. I mean, if we looked at it closer, and I believe this is the one that looks like a flag. Now it does have quite a bit of overhead resistance. If you're a trader, I don't think this would interest you. You'll probably already turned me off. Relatively strength, this is relatively strong. So as you can tell, I mean, it's moved. It moved 60% since when? Since 2013. How much did the S&P, what? Yeah, it just pretty much kept up with the S&P. So if you would have went here, if you'd have bought in here, yeah, you would have been much better off with the S&P from here to here. But they both did pretty well. So I just happen to like this one. I do think it's cheap. Here's the Internet Initiative Japan. It's much more volatile. On a relative basis, it's cheaper. But it's pretty much tracked the S&P. But look how much more volatile it is than the S&P. It's a volatile stock. This is the one that I would be waiting for, because it's traded as low as 2. It's traded as low as 2. When I went to San Diego in 2009, it was at 2. And then it was like a 5-bagger in a very short time. Yeah, it'll make your money quick. Yeah, this is the one I'd prefer to trade. The other one I'd probably just buy and hold. Okay, well, I don't know how good of an analysis that was. I'm not crazy about it, but those are two of my favorite stocks. Internet Initiative Japan, I've been following that. I never actually bought it. I think when I bought it, that was right after my divorce. I was buying stock before my divorce. I don't think I've bought a stock since my divorce. This one I did buy. Kept it for a while. I don't remember the particulars, the JOF. But yeah, Out of those, I'd buy the Internet Initiative Japan, and I would wait. I would accumulate some cash, and I would buy it after it crashed. It's going to go back up. Which, you know, you might do the S&P the same. But yeah, if I want to keep them for 6 months, I'd probably buy the JOF. It's not as volatile. Bye-bye.